What up, guys? No video in 2 weeks. I've been on the road. I'm now in Lithuania near Kaliningrad. Haven't had the equipment, not really the time, but I finally found some equipment and time. So I'm squeezing in another video just before I return. I should be back in 3 days to my usual setup. So back to regular scheduled programming by then. So let's try and recap what's happened in the last 2 weeks, roughly. Yesterday was a market holiday. Canada was open though, so there were one or two stocks that I followed that were open there. But otherwise, we've just had continuation on the upside, which I have not been able to predict correctly. I thought we would be going sideways or low by now, but it's just more upside. It's kind of unbelievable. I feel like every day I'm expecting to see the market's green, which reminds me of what the bull market was like before. Just every day, yeah, up again. And if you're down, you're never down more than 1%. It's unwarranted. It's it's very shocking, I think, that the market just keeps going up. Now we've had the European markets go up, make new highs. I think one or two of them made new highs actually, which is unbelievable. But the only justification that I can think of, there are two actually. There's the fact that inflation is being priced in. So usually, you look at any example of an economy suffering from high inflation. I'm talking about Weimar, Germany, Zimbabwe, Argentina, whatever. The stock market will always make new highs. It'll just be running up higher than inflation. So it's actually the best hedge to inflation. I think it's even better than gold to some extent. So there's that. There's the pricing of inflation. Otherwise, there's this AI craze that's just completely taken over for some strange reason because it's been around for a long time. But Nvidia is a perfect example of that, which I'm short, which I've been covering a little bit and then reshorting. I think my average is 390, but then I added a short of 435, so it's probably a little higher now, but let's say about 400 max. So I'm underwater, but no problem there. It's a pretty small position. It's like the value of one of my miners. So if Nvidia goes up, generally the whole market's up. I'm making money, but at least there's one thing to look forward to if the markets are down, if everything else is down. Anyway, with all that said, let's get straight into the S&P. So the S&P has just gone up, taken out the resistance over here. You can see, and that's 430. So that's a nice psychological resistance. It's also, you can see how candles were reacting with 430 being resistance, and then we just broke straight through. We stopped sort of nowhere in no man's land. I checked out Nasdaq just now. Nasdaq has resistance just here, so that's why the S&P just reversed all of a sudden here around 443.5. It's because the Nasdaq had strong resistance. So sometimes and I've covered this already. Markets will sort of influence one another, and if one of them, like the Nasdaq, hits resistance, then they'll all hit a sort of intermediate resistance. So where do I think we're going to go? I think we're going to go back down to 430. I always say we're going to go back down and it keeps going up, but honestly here it's a little ridiculous, and at least test resistance. It would still be bullish for those people who are bullish out there. A retest of 430 would be still super bullish stuff, breakout, retest, go higher. Do I think we're going to go higher? No, I can never justify us going up despite this inflation AI craze. I'm sorry, it's no excuse. You don't deserve to be all the way up here. Look what the Fed said. I don't believe them, but look what they said anyway, that they're pausing, but it wasn't exactly the most bullish pause because they said they're not going to cut rates for years, which I don't believe. I expect them to cut rates next year, not this year, actually next year. I do expect them to pause and hold and the market to collapse, and eventually they acquiesce and cut. But I think that's months away, the first cut months away at least, not years. So yeah, 430. If we overshoot, then we can hit this resistance, which would be about 420, but that would mean a massive drop, 2, 3, 4 red candles. I don't expect that. And to be honest, if we do have massive big red candles, that would really, you'll be surprised how quickly mentality changes from, oh, we're bullish nonstop to, I think we're going to see new lows. That takes just 2 or 3 days of heavy red, like this kind of big, strong red candles, and then everyone freaks out. So yeah, 430, otherwise 420. Otherwise, if we keep going down, probably 410, to be honest. If we go higher, which I don't foresee, but if we do 450, you can see here, this candle, top of this candle, also a nice round number, and then 460. Very simple. The S&P, look at the SPY, it's every 10 unit increments, 460, 450, 440, actually, no, not 440. 440 is the exception. So 460, 450, 430, 420. I think we're far away from 410, but 400 will also be a important ascending and psychological number. So 10 unit increments. Nasdaq. First of all, you can see why we stopped where we did. Look at this line that I drew probably weeks ago. So we touched resistance there. Let's call it 372-ish. Coming back down, we probably will hit this line, which was the breakout zone, the mini breakout zone, which also coincided with this little gap. This is actually the only line I've drawn in 2 weeks. I drew it just now when I wanted to see why the S&P stopped where it did. So not straight, but you know what I mean. So Nasdaq, can we go here? That's probably 1 day away. 357. I think we'll go straight below that though. If we do go down, we're going to go straight. We could stop intraday, but otherwise 350. Nice round number. Also the low of this area when it was consolidating. Also resistance here. So 350 is a number. Again, just like the S&P. 340s, well, maybe just a bit above. Let's call it 338. And if we really do go through that, then it'll be the ascending support. But also this zone here, you can see why I drew these lines. I think they're all correct, which is why I kept them. I like to delete lines when they're of no value or incorrect to clean things up. So I think I agree with everything here. I just don't think this line here will actually be relevant if we start to go lower. I just drew it to understand the possible intraday technical reversal point. On the way up, I don't even want to cover it, but I regretted not covering it more in depth because we've been going up, although I think I did keep these horizontal lines in place before we touched them, and they have proven correct. Next one up, to be honest, 400, very, very big psychological number. Technically, it's been resistance all-time high. Maybe we stop off here, by the way, 390, also a nice round number. 10-unit increment also happens to be the high of the failed attempt here before we started the flush. So just like the S&P, 10-unit increments. The Dow Jones, weaker, but the Dow and the Russell have been weaker for months. I think it's months now. S&P and Nasdaq have been the strongest, especially the Nasdaq with AI. Yeah, the Dow, and again, these lines I've had in for weeks. So the Dow failed to even test this zone, although it was pretty close. This resistance point here didn't play too much of a role, just 1 day broke through, but you know, you're forced higher with what the Nasdaq's been doing. For me, the Dow Jones just doesn't have the strength to take this out. I think the S&P and especially the Nasdaq are exhausted. I think we're going to come down. I think the Dow Jones will come down very quickly. It wants to. Look at this low of day close on, what was it, Friday? And by the way, I don't understand this market holiday, Juneteenth. I have no idea what it means. It sounds like another cultural identity, weird holiday. Just, I don't even want to understand the explanation. But anyway, if we go lower, 33,800-ish, I would say. A line I drew a while ago, but you can see we hit support there. It's like a mini zone, but I think it would also come into play here. So 33,800. I don't even know if 34,000 will intraday. Yeah, it's a nice number to bounce off if you're going down, but then we'll probably flush and close below it and probably 33,800. So for me, that's the first zone. Then this one maybe intraday, but really I'd be looking for a move all the way back down to basically 33,000. So for me, the Dow Jones, I'm looking for a move lower. I'm not going to draw any more lines, actually. I just feel like it's going to come down, and it won't take much to take it all the way below 33,000. On the upside, let's close above 34,700 before we talk about more upside, because for that to happen, it would take a lot. It would require these markets to go higher, and they're exhausted. They should be exhausted. So only really going to discuss the downside for the Dow Jones. The Russell, I don't know which one's weaker, probably the Russell compared to the Dow. So Russell's probably the weakest out of them all. Obviously, it went up a bit because of everything else going up, namely the S&P and the Nasdaq. We took out this resistance, these double tram lines here, 180/181.5, whatever you want to call it. So we took it out. And now we're consolidating sideways at prior support. Is acting as support because we went above it. It's not resistance. So it's trying. No, normally, if you are going to make it, you go sideways a bit and then back up, test this, and then we'll see go higher. This is not going to happen. I'm going to delete it straight away because I just don't see this happening at all. Au contraire, I feel like we're going to come back down to the 180, just like the Dow. It won't take much. And look how low we close, not low of day, but still just a little bit of a drop in all the other markets. And this thing is straight away going below 184 or close below 184 should take us straight back down to 180-ish zone. But I expect us to go back down to 180, sideways a bit, and actually lower. I mean, I'm so biased to the downside, but what can I say? The best news, the best price actions all been priced in, but we have so much downside. The risk is just incredible. Yeah. So Russell, I expect us to go back down to 180. Not today, Tuesday, by the way, but this week. Upside, of course, prior resistance of 200. Very strong resistance, probably hit 190, to be honest, 192, then 195, and then 200. But I'm not even going to entertain this thought. Okay, the banks. The banks are a bit like the Russell, weakest price charts. This is pretty weak. Think about how much everything else has gone up, the tech stocks. And the banks that have been decimated the most, you'd expect them to bounce quite a lot, but not even. So that should tell you what to expect if we start to go down. And look at this, we did close above resistance, and I think my resistance is pretty accurate. But think about how much of a move everything else has done. This, once we start to close below 33, and I do expect a down day, a down week actually. First of all, let's just cover the upside because that'll be short. This descending line, which should coincide with the high over there. So let's say 35 to 30, not even 36, 35 to 35.5. I'd say 35 is resistance on the way down. 33, you want to close below 33. And look at the pre-market here. Apparently we're at 33.3. We're going to close below 33. And where do I think we go? We go to sort of 30, 32, just under 32, with this line here being a bit of a line in the sun, because if you start to venture, especially close below that, we're talking about absolute all-time lows 30. This is so close to flushing, despite what the market's done. So I think the banks are very weak. And these are the senior banks. KBE, this is the KBE and the KRE especially. These two, they still look identical. Look at me. I'm switching between them. You can't tell too much, except for the fact that I'm on a slow computer this time. But they have the same chart pattern. I just expect a down day. We have this ascending support. Maybe it holds for one day. When we fail to rise up and we start to close below this ascending, we're going straight back down. In this case, KBE 34-ish, that'll hold for 1 or 2 days, maybe a small bounce, and back down 32. All the banking stocks, banking ETFs in this case, very weak, and KBE, KRE, you can see they failed to really take out their resistance. KBE is where I placed that horizontal resistance, didn't even venture up here. Look, 40, that's a big round number. That would take a lot also to close above that. For me, the banking stocks, think about what the market's done, had a big move up. They're going to come back down. When they lose ascending, they go right back down to these areas, and all-time lows are very, very quickly reached after that. So watch out below with the banking stocks. Okay, let's look at interest rates. For the entire bear market, they've been the most important asset to review, to be honest, to keep your eye on. The 1 year, it hasn't changed since I last looked at it. We reached the absolute highs. We've basically gone sideways. Look at it so far today. So this is more bullish than the Nasdaq. It's just always up. And will we close above 5.3? For me, it's 5.3. Yeah, we will. If it's not today, it's in 2-3 days. And once we do, we just lift off and never come back down. If we do, it's just to retest the support and go higher again. So the only thing that can destroy this chart is an absolute rout in the stock market and everyone piles into bonds, and then we have another destruction to the chart pattern. That's, which would take it below this ascending support and by a lot, I suppose. But otherwise, up. Just simple and up. 2 year, okay, they get weaker the lower you go in the yield curve, but essentially it's the same thing. What happens if the 1 year goes to 5.3, closes at 5.3 or higher and starts to lift off? Well, the 2 year will start hitting its all-time high, 5%. Obviously, there'll be resistance, it'll come back down, but it'll start to close above 5.1%. Then the Fed has such a problem. It's just the market, the economy has to break. Where does it break first? Is it banking stocks? Is it commercial real estate? Is it residential real estate? They're all tied. It's all the same thing. Is it the student debt bubble? Is it the car? It doesn't matter. It's all debt. So there will be breaks, and it doesn't have to be the US first. It can be other countries. If we're going to look at the UK gilt, the 10 year, that's taken the headlines also recently. And I mentioned that weeks, maybe months ago, like it's creeping back up. Point is, up. 5 year, up. Same chart pattern, up. If we come back down, well, we've done that already, and we retested and we went higher. It's just sideways up. To be honest, to be bearish all of a sudden, or bullish bonds, but bearish yields, you'd have to close below this level, this dip level. They've all got the same chart pattern though. Up, look at this sideways, consolidating, and then up. This one should close above this descending, and that's the 10 year, very, very significant. 3.9% close. Bam, we're going to test and breach and close above 4%. 30 year, weaker than the others. Not as important as the 2 and the 10, but still, as the 2, if the 1 year starts to close above 5.3%, the 2 and the 10 years start to creep up. This, I don't care. Up you go. And the yield curve is just inverting even more, by the way. Let's look at the EU. Yeah, it's a red day so far. Zoom out. Look at that. Despite the smash, just keeps going up. Look at this. 1, 2. Okay, 3 pops. It's a head fake. 4, 5, 6. Bam. We're going to go up here, then retrace, and then higher. And the EU economy, I don't know which one's worse, the US or the EU. It doesn't even matter anymore. The Italian, the German, the French, all the same. To be honest, it's all centralized on the EU 10 year. But let's look at the British. Look at that. I remember talking about that maybe here before too, but now where are we? Oh, it's a red day. Doesn't matter. In 3 days from now, we're back up making new highs. That's the 10 year. Remember what happened all the way over here? The UK government collapsed. All talking about the Bank of England has to intervene and whatever. You got some new prime minister who's financially sound and he's conservative with the finances. He's from from financial industries, worth hundreds of millions. Don't care. Crap. Up it goes. It's all a fraud anyway. He has no chance. I mean, look, to solve the problem, you need to cut welfare, end the war. These guys are just pawns. They're not even in charge of these decisions. So, and the 30 year is also weaker than the 10, just like the US. So anyway, yields in short, despite the red you see on the screen today, pre-market up, and that puts more pressure on the stock markets and the currencies also, the currencies versus gold. In particular, talking of which, let's go check out the dollar. So the dollar, and you know what? Not many people saw this trend line, which will appear now. This descending line was the resistance. Otherwise, we found resistance out of thin air. And I saw it late, and I saw it before these candles started to peak out, but I should have put it in. Normally, I'm quite good at these descendings. I had other descending lines, as you can see. One that we broke out of, that's why we went higher. Another one we didn't reach yet. If we did break out of this one, that would have been the next resistance. And to be honest, it would have coincided with this horizontal. So that's very strong resistance here at 105.5/106, which at the time of breaking out of this, I thought we'd get to. And to be fair, we did rise quite well. We stopped off at this horizontal, which I saw, but that didn't act as resistance for too long, but I thought that would also be the case. And then here we are just finding resistance before we're touching this. I'm quite proud of that. And then we came all the way back down. I thought we'd come back down. And I did actually think, I don't know if I mentioned this, that 102 would be hit. Because think about it, finding resistance. You want to come back down, especially after this sort of head and shoulders period. Yeah, you want to come back down. You're not going to go all the way back down to this level here where we scrape the bottom and we finally decided to break out. We're not just going to come all the way back down and touch the low of that. We're going to bounce. So, okay, apparently I got this right. That's what I'm saying. What happens now? Well, we go sideways. We try and bounce, but we're not going to bounce straight away. Obviously, I don't know. But let's just give it a few more days. If it's sort of, if we hold, let's say 102 or just below 102, same thing, just hold this level, it'll probably consolidate and want to test this area. And this time you'll find resistance lower. You'll find it around here. Let's call it 104. And then it's all about, okay, can we break out of this descending? Everyone will start showing this chart. You know what? Let me get rid of this so it's clearer. And this. Don't need this anymore. Don't need this. This is irrelevant. Don't need to prove that I was right or something. So we're going to go sideways here. If we start to raise, it'll be 104. And then everyone will start talking about this descending line, which is the only resistance really in play short term, and about closing above it. And if you do close above it, then this one starts to come into play. Then it's really a strong projection high if we manage it. If, however, we go sideways and we start to close below 102, we're going to have to test the low of 100.8. And then it's okay. Obviously, we're not going to just flush 100.8 unless there's news that does it. But I'm worried about news because you got lots of head fakes. You got also the reverse. So you could have a bunch of stop losses triggered and then the market reverses and then it looks good because these reversal hammers look really, really strong, especially with a good daily close. But the point is, I expect us to go sideways. If we hold 102, then we go up to 104, and then let's see if we can close above the descending, and also where we are in terms of the time period, because maybe this more strategically important longer term descending comes into play. If, however, we fail to do that and we start to close below 102, we should see a flush down here, 100.8-ish low. And then let's see if there's some flush and how it closes, because if we have a reversal, then we're back in the game for a move back up. If, however, we do have a close below 100.8 with news that justifies it, then yeah, we have to start looking at 98, which is a good thing for me. I don't mind. But then again, I hold a lot of dollars, so I don't mind. I'm good either way, actually. I've got a plan for both. But let's see what happens. This move back down here, though, was kind of expected, but I actually am not too sure what to expect for the next 2, 3, 4, 5, 6 days. But then after that, it should be a bit more obvious. I hope that makes sense. Okay, let's look at commodities, because I'll say this straight away. Gold and silver are relatively weak compared to what the dollar's been doing, but we will not start with gold and silver. We'll start with copper, whose chart I haven't seen in a while. Okay. This horizontal held perfectly. Up we went, blasted through prior support, which didn't act too much resistance a bit. And then we touched this. The lines were good. So yeah, it's reclaimed its position within this ascending line. I know we flushed it, but I think it's still relevant, that line, actually. Let's see. I think this zone here is, maybe it's replaced by this one here. Resistance is correct. Let's see. Sideways, it's the dollar, again, a big influence. Again, fundamentally, copper, like gold, silver, and pretty much all the commodities belongs really high. So my bias is to the upside long term. Let's see. Goes sideways, starts to hold this, should coincide with this ascending. I think it's still relevant, this ascending. We can certainly see if it starts to go lower, this zone should act as, I don't want to add too many trend lines, but this one could also, if we start to go lower, comes here, coincides with descending. I expect a lot of support around here. And then let's see if we can reclaim the highs, the four or higher zone. Oops. Okay, well, that's copper. I'm not going to add too much to that. Let's just see what happens. I do expect it to, if it comes lower, to have a bit of support here. The market's been going up too, and copper tends to move up with the market. So let's also see how copper reacts to the markets. I think I'd want to see that before judging too much more. Gas, finally, you know, this move up, very nice. Obviously, I'm long gas, but I'm only long 2 out of 5 lots. But I think you could add, but I don't like to add after big moves up. This move down surprised me. I didn't expect it to go down this much. Finding support near the lows, though, that was expected because it's been finding support for a long time. So finally, we moved up. Then this big move, that was nice. That's just what it needed. Now let's see. Obviously, we've got resistance around 2.8. Yeah, let's see how. For me, I'm bullish natural gas. I'd say it's 2.78-ish, the old high over here. Then after that, 3. And to be honest, if we start to venture into the 3 zone, it's going to look so bullish. People will be piling in because remember what the chart looks like, and it should be much higher. So I'm very bullish natural gas. It's very hard to reach short term because this move here just took me by surprise. I didn't expect it to move down that much, but medium and long term, just bullish. So 2.8-ish, just below, and then 3, and then to be honest, up we go. And this descending line will definitely be resistance. So, but natural gas looks beautiful, finally. And to be honest, it's held this zone, this 2.1 or just 2.2-ish zone for so long that I'd expect strong support to get down there. Let's look at oil. Oil also has been resilient towards its lows, a bit like natural gas. It needs to, well, you know what? When we had this drop down here and then another drop, I thought, okay, oil just needs to go lower. It wants to go lower. The demand isn't there. The OPEC nations are announcing another, they announced another supply cut. We're going to get the shorts. And it was just such a whimper of a move that I thought, nah, it wants to go lower. But then again, straight off the lows, we find support. So the point is, I still kind of feel like oil can flush 64, but this is a damn good zone to buy your first lot. I haven't bought oil, having said that, but I think you buy here and you should be happy you bought there. Yes, it can go lower, but you should buy knowing that it can go lower and being okay with that. But it could just hold and go higher. I hate to cover both sides, but point is, this is a good buy zone. And I still own just the one PEI Prosper Energy oil stock, which doesn't follow oil as much as, let's say, Exxon. But point is, down here, long term, medium term, great buy. Can it go lower? Yeah. It feels like it wanted to, again, because of these Saudi and OPEC nations announcing, supply cuts. It's very bullish for price action, but you just didn't see it because maybe, yeah, the way I see it is just the demand is not there and they're looking forward. The market's always forward looking and it's seeing a recession and the drop in demand. So despite the supply cut, the demand expectation cut is even bigger, which is why the price is not rallying. So it's a good place to buy, but it could still go lower, obviously. But yeah, very bullish oil nonetheless. Uranium. I don't even want to cover uranium because it did what I kind of knew it would do. I was greedy and I kept on mentioning that I was greedy and I didn't deserve to buy it with my expectation of a flush that never came. So congratulations to bulls. I kept on seeing these uranium stocks moving up nicely. I think Cameco is above 30 finally. It deserved it. Huge moves and I didn't get to participate. But look at this though, beautiful pennant. I said, look, a decision has to come soon. We're getting tighter and tighter. And just as it looked like it was going to flush with this 1-2 huge candles, and then but to be honest, by then, look at this one here. This one here, Thursday, the 1st of June. You closed above these two. Look at that close up there. And you'd ventured higher before that, which meant now resistance was support. Look at that. Support. And then just going sideways for 2-3 days here on this descending. And it was obvious by then. After these 2 days, it was obvious. I didn't want to chase it, but it was obvious. Imagine holding and seeing this. It must be beautiful, knowing that it wants to go higher. And that's what happened. Hits its head on this descending. This acts as support. And then bam, you close above and then follow through. It's beautiful stuff. And now next resistance, just as I've drawn, is sort of this zone. So it'll start venturing up here, 24, and then I don't know what will happen, but long term it'll go to 30, 32, and even higher. So well done to the uranium people, and tough luck for me who wanted the flush. And I don't know if a recession comes, will uranium get taken down? Well, a recession's here, but a flush in the stock market, will uranium get taken down, or will it just basically creep up higher forever as the reality of the necessity for uranium becomes a reality? So yeah, that's something I have to deal with. Let's see if there's a drop, I'll probably buy, to be honest, and then we'll talk. Gold and silver, finally. So despite the dollar drop, first thing I want to say, gold has not seen much strength. It should be, to be honest, probably around 2000, right? I mean, think about the dollar being pretty close to its 100.8 low. Look how high gold's been. So you'd expect gold at least at 2000. Obviously, there are other moving parts. Stock market's been going up. That takes a lot of shine off gold. Because remember, when the stock market's been flushing with the banking crisis, gold kept on going up inversely to the stock market. So yeah, the market's been going up, the dollar's been going down. So it kind of makes sense. I mean, it does make sense because the market's not wrong. Money is flowing into certain assets and that's translated by price action. But still, a bit annoying. You'd expect a little higher at least. What do I expect now? I don't know. It depends on the dollar, and I'm not sure about the dollar. I still need 3, 4, 5, 6 more trading days until it becomes a bit more obvious. It's done going down. It hit 102, the DXY. Now it should bounce, but will it have a fake bounce and flush? And if it does, maybe gold starts to finally get to 1980. Well, let's just look at the technicals. For me, everything drawn remains correct. Nothing new to add. You can see that 1970-ish just here has been a bit more of a short-term resistance zone, but for me it's still this 1980. I mean, I don't want to draw two lines, but actually I probably could, because you can see the support here, low 1970s, and here the resistance on the way up again, low 1970s. So it's really between, let's say, 1972 and 1983, 4, that 10, just a bit more, $10 zone is where you're getting your resistance and support. So let's see how the market and the dollar affect gold. Keep it simple. On the way down, of course, we've seen, and this day here, this reversal day here, it was the Fed day, wasn't it? What day was that? I forgot, whatever. Yeah, middle of the month. Great reversal stuff. But again, the market and the dollar action sort of had too much of an influence and interrupted the move up. So, but those are the trend lines to look at. On the way down, can we now move this one down to here, 19? I still think it's more here. Yeah. Anyway, let's see. Let's just see. I'm not going to comment too much more than I'm looking for it to move higher, but it's again the dollar in the market. You don't even need to look at gold. Just look at the dollar in the market, and once they're starting to have crazy moves, then you could look at gold. Silver has been stronger than gold. Look at this; it's way higher than where gold is. And I just feel like silver, if gold starts to move up, silver really is ready to run. I mean, I saw it at 24 just the other day, literally the other day, whereas gold is, I'm used to seeing gold around 1980 when silver's at 24, and now it's, silver's very close to 24 right now, and we're at 1950. It feels like, at 1940 you're flushing, but at 24 for silver, you're going up. So silver is definitely relatively stronger. But again, if gold starts to flush because of, let's say, the market's going higher or the dollar's rallying, then with gold flushing, you can't expect silver to perform miracles. So I'm not going to discuss it too much more because again, it's the market and the dollar that's probably more important right now, and I've covered those. I'll just add this little line here just for support for silver before it goes to absolute lows of, let's say, 22.7-ish. Let's see. Miners, sorry. They are okay sideways. You see, they benefit from the market being up a little bit. If you go back to when the banking crash was taking place, you'd have the miners going up with the metals, and it was beautiful. The market was going down, and ultimately, I like the market going down. It deserved to go down. I like to think that I'm going to buy the general markets after I've made all this money in the miners. So for me, that period was great. The crash, whilst I make money, just relatively beautiful. Now that the market's been going up, well, yeah, gold's sort of lost a bit of limelight, plus the dollar rallied a bit during this period. So gold was a bit subdued, but at least the miners benefited a little bit from the market going up. So, but still, we need the metals to go up for the miners to go up. Ultimately, you can't just have gold and silver go down, 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 and expect the miners to go up just because the market's going up. So ultimately, we do need the metals to go up. So it depends once again on the dollar and the market. Otherwise, this ascending support seems pretty prevalent still. So I reckon that will remain support if we do have a bit of a drop. But, if we have a drop for 1 or 2 days, you don't want us to start closing below this zone here, GDX at 30.5. That'll be important. And also, if we go a bit lower, it's really 30. You do not want to start to have a close below 30 because that will ruin the chart completely. And then you'd have to start to go back down to 27 on the GDX. So as long as we can hold this zone and maybe rally, that'd be good. But if we start to close below 30, then we have to go basically down here, 26. So watch out. Oh, and by the way, on the upside, GDX, it's quite hard to tell whether it's going to be this zone or more this zone. I think we need 2 lines again here. I think you have one resistance here, 32, just above 32, 32.3, and then you've got another one here, 33, just above 33. And this is a bit of a no man's land, actually. So once you close above this, you'll go straight there. Yeah, I think that's probably worth putting in there. GDXJ, probably the same thing. You got this 38 point something, and then also 39. So I should really zoom in for this, but I don't have my usual equipment. This sort of 38 or just above 38 should be resistance. But if you go higher, then expect 39 to be resistance. Also nice numbers. Otherwise, the descending comes into play too. But here, once again, the ascending, very nice, right? Look at that beautiful ascending support, which also means it's very not nice if we start to close below. So you wouldn't want it to close below 36, although you could have a bit of a fake out. No, but then you've lost ascending. For me, if you start to close below 36 and you're outside the ascending, it's not going to look good. So I don't really need to put that in. I know that, but go on, just so it's very clear like that. That's all you need to see. Okay, that'll do. Look, sorry for the setup, the rambling. I've been away for 2 weeks. I will be back to my usual shorter and more neater setup, let's say. But otherwise, I hope this was a decent summary. And I look forward to the next one. I should be back in 3-4 days. Good luck.